You've heard a lot about the fallout from subprime mortgages and credit default swaps, but what's next? The word on the street is it could be the CMBS market, better known as commercial mortgage-backed securities. Just like a lot of other financial sectors, loans are tight. Craig Evans, Senior Managing Director of Colliers ABR, says,
"Nothing is trading, no new loans are being originated." And that's a huge problem with regard to commercial real estate liquidity, because as loans are maturing that need to be refinanced, there's not enough financing out there.
And there are a lot of loans. CMBS loans exploded during the past few years, from $93 billion in 2004 to over $200 billion in 2007. But in 2008, the market shrank to just $24 billion.
And going over the next 5 years, as the CMBS loans in this huge bubble, which were originated, mature, that's going to be a real problem.
But what about loans done during the bubble years? These loans resemble their distant cousins, subprime loans, and loans that would have previously been rated in the junk bond range were now rated A and above. And, just like subprime loans, loan amounts increased. Before, typical loans that were 50 to 60% of their appraised property value now became 80 or 90%. Plus, the loans had lower interest rates than was appropriate for the increasingly risky investments.
Further, the loans were done interest only for longer terms than they would have been done previously. They were done interest only with accrual features so that the borrower didn't even pay the interest for the first several years of the loan. And as the market has deteriorated, it is those loans that are falling apart very quickly. And
where can we expect to see this market unravel first? Robert Sammonds, head of research at Colliers, said that Orange County, Dallas, Atlanta, and Phoenix are already feeling the impact.
Of course, that's also affected with the layoffs that have come, residential stock in the major financial centers like even New York City. And on the retail side, because a lot of shopping centers are having difficulties right now, and a lot of some of the super regional centers and malls are also having difficulty because the retail trade in general is having an issue at this point with sales way down and a lot of retail stores going out of business, quite frankly. I think we're certainly going to see more of that in the first quarter of next year.
There's a lot of pain out there, but where there's pain, there's opportunity. And Sam Zell always used to say, buy when there's blood in the streets. And that's coming.